Hi everyone, this is Mike Bonn with Hard Money Mike, and this is April 2022's Market Watch as far as we look at the financial side of real estate investing. So today we're going to go over 3 points to make sure you understand the markets so you position yourself right so you can take advantage of what's happening out in the market. Number one, what we see and what everyone should be at least cognizant of is the interest rates. Last year, interest rates for the consumer, the people who are buying the properties out there, were in the mid to low twos. 1 year later, in 2022, we're seeing now interest rates in the mid fours, and they think they're going to keep climbing. What that means is there's less people who could afford the properties they could a year ago because their debt coverage ratios are just out of line. So you have to watch this because right now they're at 4.5. In 2 more months, they could be at 5.5 or 6. The numbers that they equate to, we just did an example for someone. They were looking at a $500,000 property. Last year at this time, their principal and interest would have been $2,000. This year now, at the beginning of April, that payment is over $2,600 just for the principal and interest. So you can see it increased a lot. And as rates go up, those will go up, and affordability will be an issue. Number 2 that investors should look at, especially on the rental side, is higher interest rates that you're going to pay for your rental properties. So if you're looking like at a DSCR, which is the no income, the stated deals that are out there right now, just back in January, you could have got a rate in the low 4s. Now, April 1st, you're looking at rates in the mid 6s and higher. And those could keep increasing. We've seen more increases in the last 2 months than we did all of last year. So your cash flow is going to be impacted. The cash flow of the property is going to be impacted. Can that property actually cash flow? You have to look at those along with some stricter underwriting guidelines and an ever-changing market. So please keep an eye, keep connected, find out what's happening before you get into a property. And if you are getting into rental properties, do it quick. Get in, especially in the Burr, if you're going from close to close, do it quick. Number 3, what we are seeing that is still in the positive side too is the supply demand. There's still a greater demand than there is supply, even with the interest rates increasing. There's still more people overbidding on properties than just coming in at bid price. So the market, as far as supply and demand, is still in our favor. We just have to watch over the next few months if interest rates keep going up, and that's the way they look at that they're going to keep going up, how that's going to impact the demand side of real estate. As always, we're here to provide some content, some information on the finance side. If you want to keep connected, just check out the links below. Subscribe to our channel, like, and even share these videos so you can help other investors out there be more successful. And as always, happy investing. What's our tagline again?
Happy investing.
As always, happy investing.
Do like that. And as always.
And as always, happy investing.
Maybe less hands.